Hello, my name is Norafika, and I will first introduce the market sector and the company that we have chosen to do presentation on. So mainly we focus on transportation and logistics market sector.
Hi, I'm Putri Amira. I'll be explaining about the question number 3, which is investment returns. First and foremost is the GD Express Carrier Berhad GDEX. Maintain a neutral with a revised target price of 34 cents, previously 33 cents. GD Express Carrier Berhad GDEX inked a strategic partnership with Rate Cargo Logistics Syndrome Berhad, Rate Cargo. GDEX proposed that the effect on earnings to be minimal at this point, as it presently yet to experience its gestation period. In the exact sense of the words, GDEX maintained the earnings estimates for financial years in 2019 and 2020. The adjustment in GDEX target price pursues the higher revised terminal growth rate of 3% in the two-stage discounted cash flow model, which mirrors the growth in the Southeast Asian e-commerce industry, which is anticipated to be worth of $102 billion by 2025. Moving on to Tiong-Nam Logistic Holding Berhad, while maintained neutral with a lower target price of 92 cents, Tiong-Nam Logistic Holding Berhad liable to concentrate on growing customer base. Pushing ahead, the new project that Tiong-Nam Logistic is left with is the Kota Masai Township, which is anticipated to be launched towards the end of financial year 2019 first quarter with an expected gross development value of 150 million Malaysian ringgit. Generally, Tiong-Nam Logistics is focusing to sell 100 million Malaysian ringgit worth of unsold properties in financial year 2019. Tiong-Nam Logistics is lowering the revenue contribution from the property segment, which prompts a decrease in the financial year of 2019 profit after tax margin forecast to below 15% from above 20% formerly for the section. All things considered, the earnings forecast for financial year 2019 and 2020 are being revised downwards by negative 19.9% and negative 19.6% to 33 million Malaysian ringgit and 40.5 million Malaysian ringgit respectively.
Okay, hi, my name is Sharifah Hidayah and I'm going to present on capital structure. So, type of financing that these two firms has used to raise their fund is for Tiong-Nam Logistics. They are using both capital structure, which are debt capital and equity capital. So, by referring to annual report for 2018, the company has used debt capital by both secured and unsecured debt. To be specific, the company borrowing increased from 727 million in 2017 to 837 million in 2018 for investment, which shows some increment. And also, meanwhile, for their equity capital, the company of Tiong-Nam Logistics has used ordinary share to raise funds for operating their business. Next, the rival, which is GD Express Carrier Berhad, has been using equity capital to raise funds, which is by ordinary share.
current ratio, quick ratio, as well as cash ratio. For current ratio, we can see that GD Express Carrier Berhad GDEX is more liquid than Tiongnam Logistic Holdings Berhad. It signifies the company's ability to meet its short-term liabilities with its short-term assets. Both of the firm's current ratio is greater than 1, indicating that the current assets will be able to satisfy short-term obligations. Next, for the quick ratio. By having a quick ratio above 1, GD Express Carrier Berhad GDEX should have little issue with liquidity, with contrast to Tiongnam Logistic Holdings Berhad. The higher the ratio, the more liquid it is, and GDEX would be able to ride out any downturn in its business. Lastly, for the cash ratio, a ratio above 1 implies that all the current liabilities can be paid with cash and equivalents. GDEX with a higher cash ratio implies that the firm is more liquid and can all the more effectively fund its obligation. Creditors are especially interested by this ratio since they need to ensure their loans will be repaid. Long-term solvency measures, which includes total debt ratio, time interest earned ratio, as well as cash coverage ratio. For total debt ratio, GD Express Carrier Berhad has relatively lower debt portion comparative to the equity than Tiongnam Logistic Holding Berhad. The lower the percentage, the less dependent on leverage a firm is utilizing and the stronger its equity position. Tiongnam Logistic Holding Berhad with higher ratio is considered to have taken on more risk. Next is the time interest earned ratio. GD Express Carrier Berhad GDEX with a higher ratio means that the firm is able to meet its interest obligations because earnings are remarkably greater than annual interest obligations. Nevertheless, a higher ratio can also signify that organization has an undesirably low level of leverage or squares away a lot of obligation with earnings that could be utilized for other investment chances to get higher rate of return. Lastly, for cash coverage ratio, the cash coverage ratio is valuable for deciding the amount of cash available to pay for a borrower's interest costs and is expressed as a ratio of the cash available to the amount of the interest to be paid. Both GD Express Carrier Berhad GDEX and Tiongnam Logistic Holding Berhad demonstrate an adequate capability to pay since the ratio ought to be significantly greater than 1. Moving on to the asset management or turnover measures, it will be covering inventory turnover, receivables turnover, and total asset turnover. First and foremost, for the inventory turnover, for inventory turnover, the higher turnover displays the maximum utilization of inventory effectively. Next is the receivables turnover. The higher the receivables turnover designates quicker likelihood of firm to collect what it owed to it. Lastly, for the total asset turnover, higher turnover ratios mean the organization is utilizing its assets all the more efficiently. This implies that for every ringgit in assets, GD Express Carrier Berhad GDEX and Tiongnom Logistic Holding Berhad only generates 57 and 36 cents respectively. Lastly, for the profitability measures, which include profit margin, return on assets, as well as return on equity. For the profit margin, higher profit margin indicates higher profitability of the organization. To illustrate, this means that 8 cents of every ringgit is profit for GD Express Carrier Berhad GDEX. Next, for the return on assets, the higher the percentage, the better the company's asset utilization to earn. GD Express Carrier Berhad GDEX is doing a good job managing its investment in assets and utilizing them to generate profit. Lastly, for the return on equity, the higher the percentage, the better earning capability against its equity, with several assumptions since it demonstrates that the firm is doing a good job utilizing the investors' money. This is the ratio potential investors consider when determining whether or not to invest in the organization.